Hi, welcome to this video today, which we're going to be looking at high odds breakouts. Now, in relation to high odds breakouts, we're going to be looking at the British pound today. We're going to look at it against the USD, also against the euro, and also against the Canadian dollar. We'll go to the charts in a moment. Now, in terms of the pound, it's been a strong downtrend. Sentiment very bearish towards the pound, but it did rally to the upside last week, and it's rallied to levels in all the three pairs that we're going to look at, that if we do break the levels, then we would expect immediate follow through buying to the upside, and the risk is relatively low in our view. Now, in terms of high odds breakouts, there's certain criteria that I really like in terms of when trading breakouts, and all three pairs match the criteria. So what we're going to do is we are going to go and take a look at the charts, but please do keep in mind it is my view as of right now. It can change in line, of course, with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 major Forex pairs, including the three we're going to take a look at right now, you can get limited live access to our member center on the link beneath this video. Now, in terms of the first trade setup we're going to look at, it's going to be GBP USD. Chart of GBP USD, and obviously we do the levels at the moment, but it's important obviously in a pound pair to look at the fundamentals and sentiment towards Brexit. So we'll just go through these points very quickly. Markets see a no deal Brexit as high, the UK crashing out of the zone. Obviously Boris Johnson, the UK Prime Minister, has said, unless the EU want to renegotiate, then the UK will leave without a deal. The market's seeing the odds as very high of a no deal, but the odds aren't as high as the market thinks. But that's kind of getting in the price now. Media hysteria, and you can see it this weekend about Operation Yellowhammer, leaked government document drawn up a while ago about what would be the worst eventuality in terms of a no-deal Brexit. They looked at the possibility of riots, widespread disorder across the UK, food and medicine shortages, ports in chaos, etc. Now, in terms of these things coming to fruition, that's been spoken about for a while. It's nothing new. And also the government have to look at the worst eventuality. That's their responsibility. And certainly in terms of riots and disorder, anyone in the UK knows this. If you think back a few years when we had disorder in a lot of major cities after a man died in police custody, the police and the government completely messed up the response. And the disorder across many parts of the UK was really serious. They can never allow that to happen again. So that was probably on their mind. Michael Gove, government spokesman, has come out and said, the contingency plans have moved forward, and the document is probably out of date. But the media are going to focus on it because it's newsworthy. I'd be interested to see if sterling sold off on it. If sterling doesn't sell off on it, I would take that as a very bullish sign for sterling. Point number 3, also talked about in the media, Labour and the Lib Dems are planning to stop Brexit. Well, that's bullish, isn't it, for sterling? How likely is a deal? If you go down to your local betting shop and try and just do a simple bet, you're going to get better odds on the UK remaining than on the UK leaving. Okay. Now, in terms of neither side backing down, we've got meetings between Boris Johnson, President Macron of France, and the important meeting with Merkel, Chancellor Merkel of Germany coming up. Now, in terms of, mentioned this before, Theresa May, the previous Prime Minister, the EU always knew that she would blink and back down, so they didn't have to compromise. Now they're faced with someone who doesn't want to compromise. And the EU very often do this. They'll say, we're not going to concede anything or give any leeway, then they suddenly do. They did it with Greece, we've done it more recently with Italy, Hungary, etc., etc. And it's not just the UK that loses with a no deal. It's disastrous for Eurozone as well. And you never read this in the media about what the impact will be on the zone. It'll be really big. The zone is already nearly in recession. it'll throw it into recession, basically a no deal. Merkel will be particularly concerned because of the huge trade between Germany and the UK. And I think, yeah, she is really the main politician in Europe for obvious reasons. Germany is the most powerful nation in the EU. And Merkel's mate, I can't remember her name now, has actually replaced Jean-Claude Juncker, hasn't she? So I think, yeah, German pressure will come to bear. And like I say, all this talk in the media is like, if the UK economy is saying it's all to do with Brexit, yeah? What about the European economy? That's really slowing up as well. They never say that's to do with Brexit. I'm sure it's in the mix. Both economies are not doing particularly well. I'd argue the UK economy is doing slightly better. So it's not all one-way traffic here. They will have, in my view, constructive talks, and constructive talks very bullish for sterling. We'll have to see actually what happens, but I'm obviously making the point that the bearish news is kind of in the price as I see it at the moment. And things, as George Soros says, when they look really bad, it doesn't take much to turn a currency like sterling around. And market is seeing things as really bad at the moment. Now, in terms of inflation, another reason why sterling's been sold off is that markets saying our Bank of England will cut rates. No chance whatsoever of them cutting rates. They've got inflation above their target and a soft currency. Cut rates, you'll send the currency into freefall. You wouldn't want to do that, would you? They're more likely to raise than cut. So I think the market, looking for rate cuts, just not going to come. However, sold as the GBP, well, 120 was seen as a level the pound would hit on a hard Brexit a few months ago. If you look at many bank and broker reports, it's nearly touched the level already. You can see on the chart. So recoil is likely to be fairly violent to the upside. Now, in terms of the chart, what we know is when we fell through 124, speculators sold heavily here. They also sold heavily here. We can see that from the COT net traders positions, which show speculators having a really big net short position. Commercial smart money has come in to buy sterling in recent weeks. They know that it's extremely oversold or overshot fair value, for want of a better word. So you got the 120 level, which we nearly touched but didn't quite take out, a round number. So nearly got to it, bounced, a few small candles, a couple of blues coming up. So let's draw a quick trajectory. Okay, so you got one body, two body, three bodies. So there's your second level support, which is really basically at the low of that blue. That's minor support, that's major support. Stop. If you're doing this trade, it should be behind the 120 level, so well clear of it. Where would you want to buy? Well, in terms of big trends, I always like it when you've got a 20-day moving average at a round number that line up, because if that level gives way, sorry, I'm getting the lines right. Round number 122, 20-day moving average, above it, clear of it, and then that'll be for us high odds chance of a rally to the upside. You might be thinking, why am I so bullish of a 20-day break now? Okay, we did break it here slightly and came back, here slightly and came back. Well, sterling is much more oversold down here. Got some touches there. This time we go through, we should see stops run, because as speculators sold heavily below the 124 level, a lot of them are retail traders, a lot of them have got close stops. Stop cluster, from the way we view it, or stop clusters, are going to start if we get through the round number 122. So 122.30 in, stop well back from 120 to stay clear of round number turbulence, which I keep saying. But then where could we go? because it's so oversold. Gap to 128, so near enough a 4-to-1 in terms of risk to reward. We could overrun to 130 maybe. When bearish extremes break, as we know, or bullish extremes, and everyone is not looking for an end to a trend, they can break very violently on high volatility. If this one does, then yeah, get a nice big blue up, then you can bring the stop up closer. Okay. Also, if this pan breaks up strongly, that will spill over into the crosses as well. So yeah, I think it looks a decent risk to reward trade. And in terms of a breakout, you're really looking for strong follow through. Strong follow through, so bullish in terms of when it's against the bearish market extreme. And you think stops, or we think stops, are clustered in this zone here because they should all get run and a quick move to the upside. That's what we're looking for. We should see if it happens. Now let's look at Euro GBP daily. And in terms of the year, obviously a big surge up. And now we've come off, okay? The highs. And in terms of where we are, we're literally just at the 20-day moving average, aren't we? So really, you need to get through that 20-day moving average, away from it, and use a round number, which is 91, which is where we just bounced off on Friday. So if we break this level, I think we should be off to the downside. Now, you can also, in my view, sell a rally, because I feel that in terms of a rally, there's two different stop levels depending on what happens here. Trajectory in there, you got another round number, which should provide resistance. So if we rallied back up towards this level, 92, okay, you have to wait for a weakness, but I'd be looking to sell any weakness whatsoever with a stop behind 93, okay, well back from 93, something like 93.40, okay. That's if we rally. If we break lower, clear out 91, then you can put your stop behind 92, and you've got some bodies here that kind of line up. Sorry, I need to make that line just a little bit lower. You can see what I'm doing there. Two bodies that line up there, nearly with those two bodies and that body over there. So yeah, basically if we break lower, your stop won't need to be behind 93, it'll just back behind second level resistance. Now, I don't know if I just said it, the euro is a weaker currency longer term than the USD. So this level here you could see as support. You'll have to see how things go into this level, but I'd be looking for a rundown back to major support at 87. So basically we break through the 91 level, clear of it, stop back behind second level, see if she runs about 3-to-1 risk to reward. If we rally up back towards the highs, just look to sell any weakness at all with a stop behind 93. Yeah, just using round number and getting clear of the 20-day moving average again, although the two don't line up exactly. But yeah, same sort of concept. Want to get clear of a round number and away from the 20-day moving average. So this one, yeah, decent risk to reward trade. And the last one we are going to look at, we'll go to it now, is, what is it? It's GBP CAD daily chart. In terms of this pair, I actually featured in a video about 4 or 5 days ago, I think. And in terms of in that video, I was talking about, if you've got a pair, not a pair, if you've got a currency which you're kind of universally bullish of on all other currencies, pound is extremely oversold in our view. Look for the most overbought currency generally, and that might give you your best trade. And the CAD is the most overbought major currency in our view. It's been the strongest in 2019. Pound's been the weakest. So if the pound rallies generally, this could be a big performer. Now, in terms of where I draw my levels, I just want to go through a trade that I tried on it, which is my biggest loser of the month. And I just want to go through it, just for new viewers in particular, because it just illustrates something. Big fall down here. Pound steadies at 160. I thought, that's it. We're going to the upside. I take it. Then we come to the 20-day moving average. We come back a bit. Then the red comes in, and I should have cleared out the trade. I left my stop in place behind 160, and we slice it out. Okay. So biggest loss of the month, and you see we did stall at the 20-day moving average there. We came off it there. I held the trade. Well, in hindsight, basically I should have cleared out, shouldn't I? But you are doing this in the moment. You don't know what's going to happen. And I think, this is just in terms of you watch videos on YouTube generally. A lot of people do trades in hindsight. They're easy. If I was doing this in hindsight, I'd have sold that 20-day break and followed it all the way down. Much more difficult doing it in the real world. Just stress that for new viewers. So biggest loss of the month for me. I did come straight back in, a little bit of the loss back, but not such a big position. I'm waiting to add to it though. And the way I see this chart at the moment, this 20-day moving average was through it here. Look how well it holds. Doesn't even touch it for several weeks. Here, can't really get clear of it. Bounce back to it where I got caught out. Rally above it, back through. Rally above it, back through. So really, if we see decisive clearance of this 20-day moving average, I think we could be off to the upside. And that is the level I would pick. There's a reason why I'd pick that level. Because the candle tail that I'm using is actually really a round number. It's at 162, I think it's 11. So just get through 162.30, and I think we'll be off to the upside. In terms of the price action, obviously you do get the tumble below the 160. This candle works its way back above and really clears it. These two candles holding above the open. So you kind of got support at the 160 level. It's a round number, so it's bound to provide support. Well, not bound to provide support, but it's the major support level. So through there, stop should be well clear of the 160 level, so you don't get caught in round number turbulence. Same on the entry, obviously. Did I say 162.30? Get back through the level. You've got clear of the 20-day moving average, well clear, looking for the stops to get hit. And this one I'm looking for a really decent rally. If we do break out up towards the weekly level, which is 170. So it's about 4 to 1 now. And also, if you do break out and the stops start to tumble, you just bring your stop up behind the 20-day moving average. So, I like the look of this setup. In terms of, our trading generally over the last month, you have great trades in the yen longs, your USD longs, really good. The one that we've got nothing out of at all as a currency really is sterling. Okay. I'm looking now to hopefully get something out of it. And I think, just for new viewers, market has no memory. Sterling's been our loser over the last month, but it doesn't mean it can't be your next winner. And maybe the USD and JPY will be our next losers. You just want to be trading skewed risk to reward trades. So your risk is always less than your reward. And I would never do a risk reward of less than 3 to 1. I like them 4 or 5 to 1. Then, obviously you can lose a lot of trades and still come out ahead. Anyway, good to get something back out of sterling. We shall see if we do, but that is the video for a day. We'll update in a future video, and of course you can follow these pairs in the member centre if you wish. Thanks for watching me as per usual. Take care. Have a good day.